Katie Stockton. Welcome back to Face, Katie.
Thanks, Dale.
Yeah, just so people that don't know Katie, I consider her one of the elite tacticians and market readers out there, and uh,
Thank you.
really does a great job. She's a CNBC contributor. Fairlead Strategies is her company, and we were talking about that you have an ETF that you manage, Katie. So curious about what you feel and what you're seeing after last week. After the NFP, to me, it looks like TLT and yields may have peaked. Where do you stand on the yield question?
Yeah, so we have a secular uptrend in yields, in my
Right.
opinion, and yet we've been calling for more of a corrective year this year and also potentially next year. And
Okay.
that's based primarily on the loss of long-term upside momentum. And listen, while it's a secular uptrend, we have during the last secular downtrend seen historically corrections that would last like a year or two, even more. So it's not
Right.
unheard of to have sort of downtrending yields, but still within that secular context. So let me show you on
Sure.
the monthly chart. Can you see the screen?
Got it. Yeah.
Okay.
Yeah.
This is
You
a
have a
monthly. Yeah.
Yeah, so you have kind of a negative month working here,
Yeah, so
the
it's
last candle.
you see also on the DeMark indicators are obviously part of our process for those that know it. You can
Yep.
see the numbers above the price bars or the yield bars, I should say here.
Right.
We're likely to see next month a counter trend indication from these DeMark indicators. These are long term. It doesn't have implications necessarily for the next month or two, but it does for the next year or so. And you can see also that we have here the loss of long term upside momentum that I referred to. And this is the
Okay.
MACD on the monthly chart. It had been pointing higher since late 2020. So it is a meaningful shift that we've seen over the past few months, year to date, and it suggests that we'll see this sort of peak unfold, whether it's already unfolded or will sometime soon. We are looking for a lower high versus 5%.
Okay.
The, the
Yep.
the intermediate term momentum is still to the upside, not dramatically so, but we do have a potential overbought downturn. So that's what we're watching near term.
Yeah, the high of the rally retraced 78.6 almost to
Mhm.
the BIP at last week's highs. Do you have enough confidence in the call to go out in duration and look at something like TLT for a long?
I,
Because
I,
that, go ahead.
I want to see, so I'll show you what would give me that confidence. I think we're getting close, but because
Okay.
the intermediate term momentum is still to the upside, this is what I'm watching. This is a weekly bar of 10-year yields. And
Yeah.
when you have these overbought downturns, they do tend to be actionable. But I want to give it a chance to settle in. This is just this week's trading,
Right.
so I want to make sure that that overbought downturn is locked in before putting on those positions. And
What
then
would tell
also,
you locked in? What would tell you locked in?
you really just need to see it close decisively below on the stochastics this Friday below 80%, which obviously is highly
Okay.
likely by the way it sets up. And
Yeah.
then once that happens, we have our so-called overbought sell signal, right? And
Got it.
then we'll be using the daily chart to time that entry into the likes of TLT.
Yeah.
Notice on the daily chart, this is the, again, 10-year yields, fairly oversold, right, for the first time
Right.
since back here. So we do think that we'll have a rebound in yields, whether it takes us above that 76.4% retracement or not. We don't have
Yeah.
much confidence, but we'll use that backup, a short-term backup in yields to put on those positions. So I think we're getting close is the point, but not quite there yet.
Yeah. Maybe we come back to 460, Katie.
Yeah, I wouldn't rule that
Retraces.
out.
Yeah, something
Yeah.
like that. So I also believe, my opinion, and I thought we might trade a little higher before that happened. We had that double top in the Dixie at 106.50. It was amazing to me that they didn't trade 60 to get all the stops
Mhm.
above the prior high. But to me, it looked decisive. I'm in a sell the dollar on strength mode. Am I early there too?
Well, here's what I'll say is that the cloud model, the shaded area that you see on the screen, has been
Yeah,
really helpful to us, especially with FX. And when you have a range bound environment like we have had for the dollar index, it does lose
right.
some value at times. But you
Yeah,
can also see it, here. Okay, so here was our initial support, then it became resistance. Here's a breakdown. Here's resistance. Here's also resistance. Now, look what happened in here. It got
yeah.
through. So the fact that it's gone
Oh,
through, even just by the nature of going sideways, is
interesting.
pretty interesting, isn't it? Because it suggests that the sort of cyclical down move that this is all in here has reversed. And then when you zoom out, you would suspect that that could mean we get into another secular up move, right?
Okay.
So I would say that the cloud is sending this kind of interesting message. I wouldn't say that we have a lot of confidence in what it's saying, but if we do also see, this MACD on the monthly turn positive, well, then we would expect a more prolonged sort of dollar strengthening trend.
Okay. And that's interesting because that would certainly have a lot of people wrong-footed
Hmm.
seeing yields falling here and the
Yeah.
dollar. They'll talk about the differential if that happens, like maybe the Eurozone eases and it's still questionable here. That's kind of in the market that, they're going to go before the Fed.
Yeah,
Um,
it could be, and
so,
it's still, I think, early to have decisive takeaways from either of the charts, but
yeah.
there are some key levels that are pretty much in play as we speak.
Okay. And until then, would you say you're strongly neutral? I don't just say neutral anymore. I say
I like
strongly neutral.
well, it sounds a little bit more conviction there, right?
Yeah, I have conviction. I don't know what to do.
Yes,
Uh, so,
directionless bias, right?
yeah. So I saw you on CNBC. You were there in the studio, and it was during that first, that sell-off that we had in S&Ps from 5280, and we were heading down, and there was some, short-term damage, and you were talking about that. You didn't think you would buy that dip, that you would look for a reflex rally and then one more decline.
Right.
Is that what's happening here,
Yeah,
Katie? I
that's
mean,
that's what we think is underway.
okay,
Essentially, the loss of intermediate term momentum behind the S&P, you can see it on this weekly bar chart in the weekly
yeah,
MACD. It's really pretty decisive, and it suggests that April wasn't enough, right? As much as it was a
yeah,
significant pullback, it wasn't enough in terms of momentum, but also outside of this chart in terms of market sentiment. It just didn't get that sentiment, and it doesn't need to be like a major selling climax, but it really didn't bring the sentiment data to where it would normally be at a corrective low. And there's a lot of indications that we're sort of like right in here, back from
okay,
the fall correction with
yeah,
this relief rally. For
yeah,
one, we're wary of the fact that we could see a demarc sell signal pop up as early as next week. Our last sell signal based on this model is right here. And that's not to say that we'll get into a cyclical bear like 2022, but it's
right,
enough to give one pause, right, and adding exposure in here. So we don't want to fight against the weakened intermediate term momentum, but we do think the bounce, the very short term bounce, has a bit of room. Notice that the pullback came right into the cloud. Now we're kind of at the upper boundary. This is our first proving ground, very short term for momentum. I'm sorry, for resistance. And then
okay,
we get up to the final resistance, which again is a minor level, but it's about 5260. And so
okay,
somewhere between here and there, we're looking for this relief rally to sort of sputter. And right now, I think we only have about 27% of the S&P 500 short-term overbought. So that suggests it's got a few days of room, and
okay.
that's when we'll look to reduce exposure or recommend hedges.
Do you have a 5220 number mean anything to you?
No, it's not a number for us, but listen, I mean, there's a lot of
Yeah,
consolidation in that area. So wherever you see those consolidation phases, inevitably that's an area of potential supply. So we always think about these levels as cushions, not precise points, regardless.
Okay. Would taking out 4,800 on this next correction bother you? Is there
That would be unsettling, and I'll show you why. I mean, we have with the 48, we have our support level below the cloud. The cloud is our initial support, but below that level, this is what we're watching here. This is about 48.10. So we're
okay?
calling it 48.10. And then we're also watching some Fibonacci's as usual. I know you like them too. And you can see there's 38.2% around
Right.
48.20. So that's our
Yeah.
range of secondary support. I wouldn't rule that out for this corrective phase based on where we stand. Notice also we have the stochastic oscillator here. It's with this little upturn, again, reminiscent of the last corrective phase where we had a bit of a failed blip up here and then needed
Yeah.
to get to oversold territory. So this is the kind of action that we're looking for where we need that oversold reading, where we'll start to feel like we're being too cautious as if we did see, new highs logged decisively a couple weeks at new highs. But it's fairly high conviction to set up for a deeper corrective phase. We
Okay.
also, I would add, Dale, that the VIX, I don't know if you're watching the VIX at all, but
Oh, I'm glad you brought it up
yeah,
because
good.
I mean we're retracing. We're having fib retracements in all of the indices, and the VIX has retraced 100% of its rally.
Yeah,
What
isn't
does
that
that
wild?
mean?
So a couple things. Again, we'll go back to that comparison, right, where we had this is about where we would be in terms of the VIX. See how it had that same sort of initial up move back before the fall corrective phase, and then almost a
Yeah.
full retracement, and then we got
Right.
another one. And this was obviously into the corrective low in
Right.
late October of last year. And then we proceeded to sort of move forward within this lower volatility cycle. That lower volatility cycle has been in place. We've been saying since about April of last year. So we identified this as a breakdown in the VIX. So in this context, like this range here, we've been calling this a low volatility regime, following what of course was a higher volatility regime in here.
Yeah.
Now, if we look at the monthly chart of the VIX, so this is why I think it's kind of interesting. We actually have a pending MACD turn. So if you look at this, it's very close to
Wow.
turning up. And
Yeah.
that would then suggest that we've moved back into a high volatility regime. So this is something that we're watching, not as like a bearish indication necessarily for the SPX, but rather to say, okay, well, the gift that the market has given us in terms of the 6+ months of pretty steady gains, we'll probably see an environment that's more characterized by corrective phases, more volatile,
Okay.
and if anything, as a money manager, it's like we sort of welcome the more volatile environments as long as they're not too painful, because they enhance the need for active management, right? So we're
Yeah.
trying to sort of think of it in a more positive light if we were to see that volatility shift. And the VIX cycles, yeah, I mean, I'd say maybe a year and a half is about average for the VIX cycles, maybe up to 2 years on the longer ones.
Okay. And so we're there.
And we're there.
Yeah.
So we're at about a year in the low volatility
Okay.
cycle. So it wouldn't
Okay.
be terribly surprising to see volatility pick up basically for the second half of the year, meaning that the correction that we're anticipating probably won't be the last one for the year.
Okay. I see the bottom of your cloud comes in around 28, and coincidentally, the first rally off the low from 12 and a half to a little over 21, call it nine handles.
Mm-hmm.
And if you tack on 1.618 from where we're at, that's going to give you about 27, 28.
Yeah, and we're
Um,
watching the monthly cloud is probably a little bit too long term for the VIX being a non-trending really
yeah,
instrument. But if you look at the weekly, it seems to be a little bit more relevant. Where
Yeah,
here, so when you see something come up to the lower boundary of a cloud like this, that's almost like a weakening trend if it fails there. And
right.
here, when it comes to the upper boundary, it's a so-called
Yeah,
strengthening trend. So you would suspect
interesting.
that next time it could get through it, and that's
Right.
again around that 21 and change area. And then we would start to think in terms of, okay, well, what's the next retracement, or what are the next peaks? Above this 21, 22 area, well, then
Great
the
look.
61.8 is around 28.60. So,
Oh, there we
and
are.
yeah,
Okay.
and fairly well aligned with this peak over
A
here.
lot of confluence there would count. So,
Yeah, true.
uh, I wanted to cover the precious metals with you. Has your view changed? I think the last time you weren't convinced about the metals. Have they convinced you?
Yes. So gold,
Yeah,
and listen, like we are definitely respectful of breakouts, and gold
yeah,
finally got through. I can't
yeah,
remember when we last spoke, but it had not broken out yet, I trust.
yeah.
So
It hadn't.
we have
Yeah,
that sort of 22, or I'm sorry, what was it, 2160 area
yeah,
or no, 2060. My gosh, it feels like ancient history at this point.
yeah.
But the breakout was really, yeah, I mean, this is a level that went back years, right? So here's
Right.
the former peaks here, failed there, failed here again, even failed in here, never got those 2 weeks above. So it was right in here
Yeah,
as of the beginning of March that we saw the decisive breakout from a multi-year trading range in gold. And naturally, that's a bullish long-term
right,
development. Suggests that we're in a secular uptrend in gold. We're seeing
right.
silver kind of just, follow suit. It's not as explosive perhaps as a breakout, but has the same sort of trajectory. So the target that we got from that breakout initially was about 25.15. I think that's pretty conservative, but certainly doable for this year.
Yeah. Okay. And the miners, I'm sure they turned, did they turn up in your work? I mean, most of them
Mhm.
rallied 30, 40%, even like GDX 30, 25 and a half to 30, 20. Yeah,
Yeah,
that was
it's
it.
I mean,
25 and a
listen,
half
like
to 35 and a half. Yeah,
yeah, they should obviously sort of trade directionally in sync with gold, but if the equity market pulls back further, I wouldn't think
bingo.
that even the gold miners are immune to that. So if
Yeah,
you're interested in having that exposure to gold or other precious metals, I would rather buy the commodity versus the equities. So I would say that
okay,
first. Just like
okay.
utilities, everybody's been talking about utilities, but utilities and any other more defensive areas of the market, we definitely have seen something pretty meaningful in terms of like a momentum shift longer term behind the gold miners,
Yeah,
utilities, staples, et cetera. So I think it is broadening participation. Here's our monthly chart. This is compelling to me, inching through this long-term downtrend, and you see how the indicators have shifted in a
yeah,
positive manner. So I do think we'll see long-term participation in the bull market cycle, but I also think that they'll still be, even if they're outperforming during a corrective phase, that they won't give us much upside in absolute terms.
yeah. They'll be vulnerable. They'll throw all the babies out with the bathwater during the
It's
next
always how
correction.
it goes, and that's why we're inclined to recommend for people to navigate the corrective phase. Simply, if you have the ability to put on a top-down oriented hedge, or
Yeah,
buy an inverse ETF, something of that nature, it's
yeah,
usually the best way to go about it because you're not incurring the taxable implications of selling individual positions,
right.
and they are almost always very broad based, and that's where we
Yeah.
get the sentiment to the place where we want it to be.
I like GDX around 30 and a half. It's about a
Okay, well, there
50%
it looks like
correction.
there's some. This is
Yeah,
the,
I
yeah, about
noticed.
31 is the cloud.
Yeah, I noticed that. So that's a great look. I think we've covered the board. Maybe I know you've been a long-term proponent of oil shares. Has that shifted with the recent sell-off? The stocks are still acting better than
Yeah.
the commodity.
Well,
And
I
yeah,
would suspect that we've entered into what could be like a pretty long-term commodity bull cycle.
all right.
Uh, So crude oil has positive intermediate term momentum still, but it still hasn't obviously gotten out of its range.
Yeah.
But we've seen copper prices break out from a corrective phase long term. We've seen gold obviously break out. And it feels to me, this is crude oil on the monthly, like it's going
Yeah.
that direction. Right now it's neutral. You can see neutral
Yeah.
indications from our indicators, but to me it is sort of moving higher within this range. And
The theme.
yeah, yes, exactly. So for now, dollar neutral, crude oil neutral, but let's see how they resolve. But I do suspect that we're seeing something from commodities that will be more of a trending type of environment than we've been accustomed to over the last couple of years.
Especially if the dollar peaks, that would be jet fuel for commodity
That's
stocks,
exactly
right?
right. Yeah, yeah. So we'll see if
How about natural gas, Katie? It's been pretty cheap.
it.
It's starting to, it's a widow maker, so we won't let your husband trade
That's
it.
it. I
All
know I
right,
laugh because
he
I
can't
often
trade
shy away, but we did actually feature it just recently in our morning note, not as a
Okay,
strong buy, but because we have, of course, the loss of downside momentum
yeah,
within
okay,
its downtrend, and some folks really love these counter trend positions because boy, I mean they can give you a really nice
yeah,
oversold bounce or relief rally to take advantage of. And it tends to be sort of higher beta within
yeah,
the complex. So we have a positive long-term divergence that's on the monthly chart. You can see on the weekly chart, we have these DeMark buy signals that were pretty timely. So we
yeah,
like to see the
nice.
response to that. We see room to overbought territory. I mean, once we get up here, okay, it's got some challenges, but that's close to three. So
Yeah, that's still a nice
listen, we
trade.
can
Yeah.
leverage that. We have folks that are getting levered up on this, and that's very brave. But at the same time, we understand the appeal because these relief rallies can be pretty violent.
Speaking about relief rallies, I actually tweeted about the breakfast cereal rally, which started with Cocoa Puffs, is
Oh,
now moved on to Wheaties, with corn to follow, and then
that's
and
so
then
funny.
and then oatmeal.
It's funny. We actually featured both the corn and wheat ETFs
Yeah.
recently as long ideas on CNBC. And
Oh,
it's because those agricultural commodities finally seem to be
yeah.
responding right to their oversold conditions. This is
Hey,
cocoa, though. This
right.
is quite different. Look at the actual cocoa. This is like one of these classic parabolic blow
Parabolics.
off tops, in my opinion. So corn
Yeah.
and wheat, yes. Maybe sell the cocoa puffs.
Oh, yeah. The cocoa, was the first one out of the gate, Cocoa Puffs. But that's interesting. Can you add those assets to your ETF when you see things like that?
No, the mandate for the ETF, which is TAC, TACK, is to
Okay.
invest in US large cap equity
Got it.
sectors. And so we're,
Okay.
we're sector investing there. And then we use for our sort of risk off components that the asset allocation piece moves into a combination of long-term treasuries, short-term treasuries, and gold. So we do have a commodity exposure at times. Right now, we
Okay.
have a very small position in gold,
Okay.
sort of treating this as a corrective phase within an equity bull market.
Is there any minimum equity that's required to buy into your ETF?
No, thankfully, it's listed on the NYSE and anybody can buy it. They no minimums required for ETFs, and we see it as a great alternative to a buy and hold strategy where you can
Yeah.
simply buy TAC and let it be dynamically navigating the sector swings and
Right.
the bear cycles like 2022 with limited drawdowns. And
Yeah.
that's our goal, is to not ride these bear market cycles too long.
Okay. So there you go. Without you having to figure out hedges or time to be in and out and in what and when, to have someone like Katie at the steering wheel, to me sounds like really someone that you could, sleep at night and know that when she gets signals, she
I
doesn't,
appreciate that, Dale.
she
Yeah,
takes them. Yeah.
yeah. And we're
So
always very systematic and sort of unbiased in how we're
yeah,
approaching markets. If it goes against us, we don't want to be there for those big downdrafts,
yeah,
because that's where you have to dig yourself out of a bigger hole.
yeah. So if you want to pro managing your money, a part of it, and you know what, Katie, I think people should diversify away from themselves. If you're
That's a great way to put
maybe maybe
it.
maybe I'm thinking me and I'm just projecting on everyone else, but I think it's a good idea not to be in control of all of your
Well, right. Our
capital.
emotions can definitely get in the way. I'm
Yeah,
guilty of it too.
yeah. So, to have someone else's view and objectivity, because it's almost like their money, but it's not as emotional as their money. So,
That's right.
what's a symbol again on that ETF?
So that's TACK, and it's the
Okay,
Fairlead Tactical Sector ETF, and it's outperforming a benchmark. The benchmark that TAC is adherent to is called the Morningstar Moderate Target Risk Index, which
okay,
if you had to liken it to something, it's about a 65-35 type of portfolio, but consider that 35 to also have a gold position.
okay,
And we have this sort of dynamic nature where TAC will sometimes have full equity exposure like it has had recently. But when the
okay.
market shifts, it will morph into those risk off categories automatically.
There you go. So, if you want to relax a little bit, don't trade all of your money. And
That's right.
Katie, really, I appreciate all your views.
Of course, Dale.
Elite stuff, and I root for you. And
Appreciate that.
hope you have a great quarter coming up, because we're only as good as our last quarter.
Yes, same
What
here.
have, what have you done for me lately?
Yeah.
So, Katie Stockton, everyone, and if you have questions about anything you heard today, just reach out to her at Stockton Katie on X, or go to her website,
That's right.
fairleadstrategies.com, right?
That's right. You can reach us that way.
And check out her ETF, and
Thank you,
maybe
Dale.
even subscribe and get ideas. Like, she was talking about wheat before me. I didn't even know it. So,
Yeah,
okay.
yeah.
All right. Anyway, kindred spirits, talking markets. That's what you got today.
Of
So
course.
enjoy, and thanks, Katie. And I'll talk to you later on in the summer.
Thank you. Take
It
care,
was
everyone.
a pleasure. My trading warrior sister, Katie Stockton, everybody. And you could join the team in 15 minutes. Everyone's thanking you, Katie. And you could join them for the morning edge in 15 minutes. I'll see everyone. Good hunting on Turnaround Tuesday. And don't just count your pips or your ETFs, count your blessings. Katie's saying thanks, and what a great interview. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.